Okay, now we can get ready. We're all set here. Okay, so we're going to talk today about market patterns that create explosive moves. And so we're going to cover some basic theories behind this, and then we're going to move over actually to live charts. So that's basically what we're going to do in the next half an hour. I want to thank TradingPub for having me here. Morgan, good to hear you again. Chuck, thank you for all your preparation today, and welcome everybody. And we certainly hope everybody has a great week, being a holiday Thanksgiving week here in the United States. Okay, for those of you that don't know me, my name is Bennett McDowell. I run TradersCoach.com. I've been in the business for over 14 years now. We've been running TradersCoach.com both as an educational portal as well as a portal where we have things like stock picks, newsletters, software, home study courses, and so forth. I invite everybody to visit us. Our website's TradersCoach.com. We have a lot of free stuff there, too, that might interest you, as well as keeping up with the markets. Also, too, I've written 3 books on trading. The book on the left is A Trader's Money Management System. This is a really good book for anybody trading the markets or investing in the markets, because regardless of the type of trading approach you use, there's concepts in this book for risk control that will help you. So whether you're a Forex trader, futures trader, stock trader, you trade ETFs, doesn't matter. There's concepts in this book that can get you going and up and running with a really solid risk control program, because risk control is so important, and that's a whole in itself. My book in the middle, The Art of Trading, this is called, ARTIST stands for Applied Reality Trading, and in this book we talk about how we use price patterns, which are the realities of the marketplace, along with momentum and volume, to determine exact entry price levels as well as support levels that we use for our stops. Book on the right, Survival Guide for Traders. This book basically tells you how to survive in today's market. Market's a little bit different this decade than it was last, and so the concepts you need to know in this book are really spot on for the type of volatility we're getting today. And also, too, we give you a business plan and we give you a free membership when you buy the book to an area on our website where you can download a whole bunch of cool stuff like a business plan and so forth. I'm also happy to announce I just signed contracts with McGraw-Hill for my next book on Elliott wave. So that'll be coming out in about a year, and I'm very excited about that book as well, because we also use that in discussing different patterns and so forth of how to trade the markets. Uncovering trading opportunities is one of the important parts of what we call the trading pie. In the trading pie, we basically have divided it into 4 equal parts. And the first part, you have to uncover the markets you want to trade that have the most potential for your trading style. And basically, you don't want to get stuck, if you're a trend trader, in a market that's sideways or not moving, right? So you want to be able to identify those markets that are either in movement right now or about to be, that you can put on a watch list. And we're kind of going to cover that today. Entries and exits, hey, that's your trading approach. That's part of your trading rules. Okay, by now, hopefully you have got a system down that you're comfortable with and you like to use. And so that's that part of the pie, which is number 2. And then if we go on number 3, money management, all right, this is a whole other piece of the pie, so to speak, that you got to master in order to do well in this business. And of course, that's a presentation for a different day. Psychology is also important. You have to have the discipline to put all the glue that holds all the slices of the pie together, okay? So very important that you take a look at this and realize that you really have to master every slice of the pie in order to be successful. Today we're going to focus on basically uncovering certain trading opportunities. And so how do we find the markets to trade? What do we do? Well, we have a couple of unique services that we offer. One is a trading pick service, okay, and I'll put a link up to that right now that you can learn more about. You can go to that link and bookmark it for later. But what we're doing is we're constantly uncovering emerging global trends, and they're changing all the time. We've got some really good ideas and some good research on what we think is going to be basically the next major trend over the next few years, 5 years, and 10 years. And so we keep an eye on a lot of the research involved in uncovering these types of trends that are developing, whether they're in the energy sector or they're in other sectors as well. And that leads us to, once we understand what the global trends are in the current time frame, then we can uncover, okay, emerging sectors. Then we apply all this using a high probability form of technical analysis where we are connecting the dots on a variety of different levels of technical analysis, whether it's multi-time frame analysis and so forth, that we have developed a matrix where we put all these forms of analysis together to form a probability on how accurate an entry would be in that particular sector that is emerging. And so finally, once we do that, then we work our way down to individual markets. And this, this can be futures, this can be Forex, you can do this in stocks as well. And basically what we try to do is uncover the best trading patterns for exact entries and exits. And we do this basically on a weekly basis. We're analyzing the markets and we're looking at all these types of elements involved in delivering the types of trends and markets that we want to be trading with. So everybody at home really needs to have a good stock selection or future selection market available for them so that they can actually uncover where they need to be for that week. If you're a day trader, then you're not going to be really concerned too much with global circumstances, but you will be concerned with daily circumstances. So everything can go from a macro right down to a micro level. The main thing we're trying to emphasize here is a plan. You have to have a plan on how you're going to analyze this, because let me ask you a question. Are all trading patterns created equal? Hell no, right? Absolutely not. All right, there's trading patterns that you should avoid, and there's trading patterns that you should take advantage of. And depending on your style of trading is going to be dependent upon what patterns you're going to find advantageous to your particular set of trading rules or style of trading. So that's really important. You got to personalize this to some degree to your style of trading. Now what we do is we take a look at a variety of different forms of technical analysis, and we're going to look at live charts in a minute, where I'm going to show you this chart, which is I believe Apple at this point. But we're going to show you how we integrate some strategies of using Fibonacci and so forth in order to arrive at certain forms of a high probability type of matrix. One thing we look at is we look at patterns that can make us money. We focus on this like a laser. And we look at bracketed markets, and we also look at channel breakouts. These are breakouts from the bracket. Why are they important? Well, statistics show that when you have a bracketed market that has been bracketed for a certain amount of days, that when it finally does break out of the bracket, it can be significant. And so we have programmed a whole bunch of our software to look for these types of bracketed markets. And I'm specifically avoiding telling you exactly the number of days, because that's based off a lot of proprietary statistical analysis. And this is what you get when you get into our stock picking service, so to speak. We do this for you. And so the bracketed markets and the channeling markets are basically really good potential setups, because big trends emerge from these extended bracketed markets. We'll show you some examples of those in just a minute. Breakouts. Not all breakouts are created equal either. You have breakouts on high volume and low volume. For example, the current rally we had yesterday that probably will extend to 2 to 5 price bars in the Dow Jones Industrial Average, all right, came on fairly low volume, not very significant. Probably more like a bear market correction than the beginning of a new rally. We look at fractal patterns and reversal day patterns. These are also important in helping us identify the best points of entry. And so we do all that. We take all that information okay, and we box it up into what we call this probability matrix, where we're constantly turning out the highest probable trades based on this information. We also use Fibonacci, okay? Fibonacci is apparent everywhere, okay? And this slide here was actually sent to me by one of our clients, and I just had to include it in the PowerPoint today. If anything else, it should wake you guys up out there. So the point is, it is everywhere in nature. This is kind of another neat slide that was sent to me. This is one of the recent hurricane, Sandy, okay? Notice also falls in line with Fib and Gann and so forth. So kind of interesting stuff, the way all this stuff fans out, but Fibonacci is everywhere, including the markets. And so we rely on Fibonacci as well. We also rely on a few other things. We rely on Elliott wave. Again, all these are pieces of the pie that we connect when looking at what the trends are in the markets. And of course, you can analyze Elliott wave and Fib on a variety of different time frames. So you can analyze it on a short-term intraday time frame if you want to try to figure out what's going to happen over the next few days or even the next hour or two, depending on how short the time frame is. Or you can extend this to the daily to get an idea of some good position trades, and then look at the trend on the weekly and even the monthly, get your long-term analysis. And we're doing this every week, all the time. Risk control. We also use risk control. When we actually give you a specific entry and exit, all right, you just can't blindly go in without having risk control accounted for. And the proper way to do risk control is very important. You have to adjust your trade size while keeping your risk a constant, even though your entries and exits will vary. So an entry and an exit that is far apart will create a lower trade size or position size than one that's closer together. And so you need to know how to calculate all this. So risk control becomes an extremely important element in the whole process. Okay, now here is some examples of the kind of consolidation or bracketed markets I'm talking about and what happens when they break out. Now you'll see some triangles and so forth. That's the applied reality trading system that we use here at traderscoach.com. But basically what we're looking for are these types of channels, and we do not trade in between the support and resistance levels of the channel. And in our subscription services, what we do is we watch these for a breakout in one direction or the other. We use Elliott wave to see if the breakout is in the direction of the dominant trend. And then we go ahead and suggest entries and exit prices based on price patterns and if the market is following the overall longer-term trends. And so therefore, that puts the most elements, so to speak, on your side in order for you to get the best bang for your buck in the shortest period of time. And so significant trends emerge from these channeling or bracketed markets. And it's important to be able to spot them and know when to go in and when not to. Let them mature, let them develop, and then when the markets finally break, then it can be an opportune time to get in. Okay, here's another one. All right, we see them all the time. And you don't, as a trend trader, you don't want to get caught in between that bracket. You want to wait for the bracket to develop on decent volume and then go in at that particular point. All right, so let's take a look at some live charts here, okay? And we'll go over there right now to the desktop sharing. And I'm going to open up for you Apple, okay? And if we look at Apple, give that a second to load so you can see it at home there. What we had here, based on our analysis, and this was an extremely good trade, is way back, okay, last in December here, we had a nice trend to the upside. I mean, pretty much very easy to spot, very clear. All the triangular pyramid trading points, part of the applied reality trading software, caught this trend beautifully. But also the forecasting techniques that we used identified correctly that this was a wave 3, we had an ABC correction down into a wave 4 bottom between May and June. Then we had a wave 5 extend to the upside, all right, and finally top out near a Fibonacci price target level between 61.8 and 100% on Apple. Then we expected, okay, at that particular point to be in an area where it was time to think about lightening up long positions and perhaps looking for a trend to change, and it did. Just kissed this area up here, started to sell off, and then move to the downside, and now we're in a major move or wave down on Apple to the downside. We've had a little bit of a perk up, which is to be expected, because when you get this many price bars in a row in one direction, in this case it was down, then the probabilities increase after you get 5 of those that you're going to have, okay, a bounce or rebound, which is what we're seeing now. We don't think this rebound, based on how we look at the markets, is anything more than a rebound, because a lot of the tools that we use, that we incorporate in our forecasting subscription services, are indicating that there's a high probability that we have not, that this recent low that occurred right here on this price bar, okay, is not the final low. So we want to encourage, if anything, short positions to be maintained instead of any long positions at this point, okay? So that's Apple, all right? Let's take a look at another one from our stock picking service. This is RIM, okay, and they make the handheld devices, of course. And from here, we get some interesting indications that we had some major move down in this stock for quite some time. Then we went into a wave 5, all right, and this is a 3, 4, 5 of 5. Now we've moved to the upside. So our subscription services have generated a long trade on this particular market. And our stop is placed right below, for right now, and it will change, this pyramid trading point here, this triangular pyramid trading point that identifies key levels of support and resistance off a certain type of pattern that we look for in trend trading. Okay? And so at this particular point, you want to be long this market, and we'll see with your stop set here, and for right now it's an open position. Let's take a look at even at the Dow Jones right now. And if we look at the Dow Jones here, let me just get it all set up. We certainly see, again, using our Fibonacci extensions area, we drew a red box in to indicate wave 5 on an Elliott wave sequence. And the blue line at the top was the October 2007 high, which we did not expect to be broken. So far, it has not been. Prices reached the target zone and has sold off. We now have a negative owl and a red PTF indicator at the bottom, indicating a clear downtrend is in place. We should experience a slight rebound, which we may have experienced and could be underway for another few days. It would also correlate with some form of rally that we usually get around some of the holidays like Thanksgiving and Christmas. Okay, but in any case, the downtrend is still prominently a downtrend. We don't see a rally, and even the volume that we look at during these particular bounces was not as significant as what we've seen during the downtrend. So the downtrend in the Dow is more powerful. Then we do something called a trust and verify. Key levels of support drawn by those horizontal lines that you see across the chart with the associated price levels with them. And you can certainly see at that point that you have these different price levels, and you can do this at home. You can draw these in at home. They have significance. When the market breaks through those, they increase the probability and therefore increase the probability matrix that identifies the trend greatly. And so we can see we have penetrated the pink line at 12,521.84. All right, so therefore the probabilities of this being in a downtrend now are higher than not. If we go below that June 4th, 2012 low of 1235.09, then that's extremely high because that's a key support level on one of the higher time frames for the Dow. And that would indicate a significant bear market is underway. This is the kind of stuff that we analyze every week. And we take a look at this and we update our services and keep you abreast of what the major trends are in the market. Let's even take a look here real quickly at the E-mini on a 10-minute time frame. Notice here we had a nice move to the upside. That's wave 3. Now we're getting a breakdown. We have a negative owl, so now we're going into wave 4. All right, our pyramids, okay, have taken us out of the market here because they've dropped below some support levels. And so now we expect a correction. How big a correction on this 10-minute time frame? Okay, basically all you have to do is go up here, get your Fibonacci tools, do the retracement lines, and basically we are expecting a correction somewhere between 61.8 and 38.2%. So it'd be 1362 to 1372. All right, so when prices correct down to those levels, and we can easily see an ABC pattern, and we're sure it's not into a complex correction, then we'll look for some support buying to come in, and then we'll try to catch wave 5. Will we go short here? No. Okay, I'm not going to go short on this time frame, okay, on a wave 4 correction. You go down to a 2-minute time frame, maybe this is a shorting opportunity based on the fact that on a 2-minute time frame, the fractal symmetry between this time frame and the 2-minute time frame may produce an impulsive wave down. But on this time frame, no. All right, let's take a look at a Forex for all you Forex traders out there. And then I think we got to wrap it up because I'm coming close to my end here. Okay, this is the Euro British Pound. Notice that it has been in a downtrend, and we had a low here. Notice the owl had a higher value in the histogram than it did previously. And we've had a move to the upside. We're in a correction here. So we're looking for a long trade to possibly get one final push up into this area here. Okay, and that's Forex on a daily, but you can use the same concepts on an intraday time frame as well. So I just wanted to share with you some of the markets that we look at on an ongoing basis and give you kind of an example of how we analyze the markets on all time frames, not just one time frame, but on all time frames. And so I think it's important for you to realize that there's a lot of analysis that goes into this, but it's very structured to deliver what we call a high probability forecast based on a lot of connecting the dots on a lot of different levels. Now, sometimes what we like to do is we like to, if you see here, there's a scanner down here. We use the ART scanner to help us look for or sort through the over 9,000 stocks so we can actually identify some that are in the kind of patterns that we like to put on a watch. Kind of very interesting here. The last chart, Bob, hi Bob, the last chart we looked at here was a Forex market, and that was the Euro British Pound, okay? Thank you, David. Okay, David's got it up there, okay? All right, so I think it's kind of interesting to see how you can apply this on all time frames. And you can see here, I'm back on the 10-minute time frame. You can see it's selling off, and we expect it to at this point. So you don't want to take any long trades until this particular sell-off is finished, and you don't really want to take a short trade simply because it's only a correction, not a change in trend yet. So it's very important for you as traders to be able to establish the difference between corrections in a trend and the actual end of a trend with a new trend developing. That's one of the key things. And, you know, since we've been doing this for so long, we've kind of got it down. All right, so let me go back here. I think that pretty much wraps up what I wanted to talk about on the actual charts. If there's any quick questions, I'll be glad to take them. We don't have a lot of time here. I'm going to put up a link here to our weekly service. You can certainly take a look at that. So is there any questions? Okay, yes, here comes one. I'm going to repeat the question as well. Do you give the technical details that support your picks in the top 10 service? No, we don't. We just indicate entries, exits, and the market and the time frame. So we give you all the information you can actually look at it for. We have found that giving too much information, okay, is more not helpful than helpful, so to speak. And a lot of folks, too, when they get our pick service, what they're doing is they're also using some form of approach on their own. And so while we have an entry and an exit, all right, they'll compare that with the trading approach they're using, okay, and they can alter the entries and exits. What we try to do is give you the ideal entry and exit. But the idea is they are going to be following this probably at home using their trading approach too. Good question. Thank you. Any more? Pretty straightforward. I mean, it's pretty easy to understand that when you have a structure in order to find the types of markets that are about to move, all right, then you're not wasting your time in markets that are not. That's the key. Okay, Dan asks, are you trading your signals yourself and do you show your results? The results are shown, okay, and some of the trades we will take, okay? So basically we give basically 4 stock trades each week, 2 Forex, 2 ETFs, and 2 futures. So we give enough of a selection to meet a variety of different markets. So there's something in there basically that can be appealing depending on what markets you like to trade. The service is new. We just started it 3 weeks ago. We have hundreds of subscribers right now. It's doing really good, and we invite you all. It's not an expensive service. It's $24.95, okay, a month. You can try it. You have nothing to lose. You can try it for a month. If you don't like it, you can cancel your subscription at any time. And the only amount of money you're out is $24.95, which is basically a trip to Starbucks. So check it out for yourself. See if you like what we have there. If you don't, okay, you can always unsubscribe. Okay, let's see. Do I look at the seasons at all? We do, and we do take a look at different types of analysis, all right? And so we take all this into account when we do basically decide on what picks to actually choose as the best ones for the week. Great questions. Let's see. All right, are the triangles Gartley patterns? Just curious. The triangles are actually something part of the applied reality trading system, and the ART, it's called ART for short, and the ART system here basically looks for, those triangles are looking for momentum in the market. They are looking for certain trend trading patterns in the market, and if you want to learn more about that, you can go to our website. I have a lot of videos that we've done for a variety of different brokers, as well as just some instructional videos on how the ART system and those pyramids work. You're welcome, Doug. All right, well, I'm showing the timer is showing 1 minute and 56 seconds. So we got 1 minute and 56 seconds before the bomb goes off. So any more questions, feel free to ask. Okay, I think we got them all. And so Morgan, I think I'll get ready to turn this back over to you. I want to just end by saying it's once again great to be here. I want to wish everybody a great, in the U.S. anyway, a great Thanksgiving. Basically, we'll see you here again after Thanksgiving at some point. I think this is a great educational format that the folks at TradingPub have put together here. So super job. Kudos to you guys. Oops, I see one more question. How do you subscribe? I'm going to give you, I put a link up there. I'll go ahead and put it in there again, and you certainly can check that out there, okay? All right. Okay, let's see. REM was a bull trade and a bear market, any inputs? Actually, we were showing REM. That one we showed you was actually the bear market had finished, we felt. So it's a long trade to the upside. All right. I think that's it.